It does appear that institutions are moving in. They're taking this price decline from nearly 70,000 to roughly 20,000 as an opportunity to move into a new asset class. And in 2018, Cambridge Associates, which is a consultant for the institutional space, basically said to its clients, okay, you may not like this thing called Bitcoin. It may sound like a Ponzi scheme to you, but it's acting like a new asset class. And that got their antenna up, because what institutional investment managers cannot miss is a new asset class that will diversify the portfolio, meaning lower the correlation of the returns. And Bitcoin is doing that. And we think other crypto assets.
And your team's holding on to the $1 million forecast?
Oh, yes, more than $1 million.
Above $1 million?
Yes.
By 2030?
2030. And in order to see the building blocks, you'll see we're not making crazy assumptions. The building blocks are in Big Ideas 2022 at arc-invest.com.
The founder and CEO of investment management firm ARK Invest, Cathie Wood, is doubling down on her fiercely bullish forecast for Bitcoin. Asked in a new Bloomberg interview whether ARK Invest is still holding on to the $1 million forecast, Wood answers in the affirmative. According to Wood, Bitcoin could go above $1 million by 2030, an increase of over 4,600% from the current price. Hello and welcome to Money Talks. In today's video, Cathie Wood updates about her prediction on Bitcoin, inflation, and global market structure, along with her strategy for a bear market. She also discusses how innovation solves problems and her open letter to the Fed regarding rate hikes.
So it's interesting to watch our strategy as fears about Fed tightening and more Fed tightening continue. On many days when the market's down, our strategies are up. Now that is what tends to happen. I'm not promising this is where we are. My compliance department would never let that happen. But in the later stages of a bear market, our strategy starts to outperform. Even it may just be that we're down less than the market. Some days we're up when the market's down. Why? Because during the later stages of a bear market, the new leadership shows up and starts performing. We're the new leadership. We always are. And many people think, oh, I've got myself covered with the NASDAQ 100. No, look deeply into those indices. We are the new NASDAQ. And most of our stocks are not in those indexes. We haven't owned the FANGs in our flagship for quite some time. That's not the new anymore. TikTok has come along and destroyed a lot of models. So yes, I think that we're seeing the early stages of a bottoming process. At the same time, many people are saying we're going into a recession. Now, we think we've been in a recession, and that the negative numbers will reassert themselves after this positive third quarter, mostly because of the inventory overhang, and we need to clear that out. I think many forecasters may say, oh, this is going to last forever, this recession through. We think it's just a major inventory correction, and then we'll be on our way again.
So a short-lived recession is what you're forecasting?
Sure. Well, we believe it started at the beginning of this year. So if it ends in the middle of next year or the third quarter, it's not so short-lived. It's only short-lived given that, that many people in a midterm election year don't agree that we're in recession now.
On Bitcoin adoption by institutional investors, the ARK Invest founder and CEO says that the drop in the flagship crypto asset's price by around 70% from its all-time high is triggering increased interest from the hallowed class of investors. It does appear that institutions are moving in. They're taking this price decline from nearly $70,000 to roughly $20,000 as an opportunity to move into a new asset class. According to Wood, institutional investors' interest in Bitcoin was piqued by the Boston, Massachusetts-based investment advisory firm Cambridge Associates 4 years ago.
Very interesting. I think you may know that we wrote an open letter to the Fed saying, wait a minute, how can the 12 of you unanimously agree on 75 basis points at one right after the other when commodity prices are falling, inventory overhangs are crushing companies, and so you have upstream deflation. We believe downstream there will be deflation. There's no debate over this? Are you kidding? Do you know that in the early 80s, and I was fairly new to the business, Chairman Volcker was fighting a 15-year inflation problem. It started in 1964 with the Vietnam War and the Great Society. So 15 years, and people were used to inflation, so they were demanding it in wages and so forth. He took interest rates up twofold, 10% to 20%. This Fed has taken interest rates up roughly 16-fold in 9 months. Now, economics takes place at the margin, changes at the margin in all kinds of pricing, and interest rates are prices. Changes at the margin are incredibly impactful. And I think we will look back in history and say, wait a minute, a 16-fold increase in 9 months without stopping to see what's happening is crazy. It's crazy. And this is what will take inflation from up 8 to 10%, where we think it peaked, to negative.
Cathie Wood-led ARK Investment Management bought over 85,000 shares of Jack Dorsey-owned Block Inc. at an estimated valuation of over $5 million based on Tuesday's closing price. The purchase was done via the ARK Innovation ETF and the ARK Next Generation Internet ETF. The ARK Innovation ETF holds a significant stake in Coinbase Global Inc. as well.
So it started actually in February of 21. We started declining. Truly disruptive innovation started declining in February of 21, while the market soared to all-time highs in 21, and now the rest of the market is suffering as well. So vaccine, people going back to work, supply shock. The businesses had shut down, wondering if they would ever reopen their doors, right? They shut down. At the same time, governments around the world were stimulating aggressively. So we had a supply shock, especially because demand actually was so much stronger than anyone expected. And I would say lessons learned. Could I have dreamed, a technology investor, that supply chain issues would have lasted more than 2 years? No, I never thought that for a second. I thought we would be over that in a year, and certainly couldn't have predicted Russia's invasion of Ukraine. So the question is this a 70s style inflation, which is how the markets are treating it right now, and why our strategy has been decimated, and most growth strategies have been hurt very hard. We don't think it is. I think the market's pricing is pricing innovation as though we have a bad inflation problem that's going to take interest rates up even higher. We don't think so. We think actually the greater risk and opportunity is deflation. I think we're going to start seeing deflation on a month-to-month basis. We're already seeing commodity prices come down. They've broken down, many of them. That's upstream, at the top of the pipeline. At the bottom of the pipeline, around the world, we're seeing a massive inventory overhang as we're heading into the holiday season. How will they clear that? Discounts. So I think cyclically, we're going to see deflation. We're already seeing it in the pipeline. Secularly, we will also see deflation. We spend all of our research time focused on disruptive innovation, technologically enabled disruptive innovation that is inherently deflationary. But that's good deflation, because as prices for electric vehicles continue to come down, we will see a continued boom in electric vehicles. It will hurt the internal combustion engine cars, but it will help the innovators. So I think we're going into a deflationary period, much like the late 19 teens. So 1918, World War I ended. Spanish flu also hit. So think about that. War, flu, very similar dynamic, right? And the other similar dynamic was 3 major innovation platforms that were going to transform the world: telephone, electricity, and automobile. They were all scaling exponentially. and took us into the roaring 20s. So supply shocks took inflation back then to 15%, but within a year and a half, 2 years, that inflation started dropping, and it ended down. I'm sorry, the inflation was 20%. It ended down, deflation, 15%, roaring 20s. I'd like to think that's what we're going into now, and there's a high probability we are.
So, do you agree with Cathie Wood's prediction of $1 million per Bitcoin in 2030? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.